Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hello everyone, doing a follow-up video, and if you didn't see the video that I did on Thursday night, worth watching back in hindsight just for a learning experience if nothing else. But it pretty much played out exactly as anticipated with the gap up open and the gap up for selling as the bears controlled the rest of the day. And I think the last video does a really good job at describing the psychology behind why I expected the gap up and profit taking to occur. Look at all that volume, huge bear volume, and the high of the day, pretty much the open on these names. So Dries resistance, we can see, look at the exact same play out that happened back here with a bullish day, a gap up open December 1st, and then the bears controlled that gap up on high volume, and then we consolidated and pulled back for another couple of weeks. So it was just another example of that happening, and it was still another lower high. The top of that last time it occurred was 640, and this time it was 615. So we had members who sold that gap up right away, ended up locking in some nice profit, and not being subject to the big pullback that occurred afterwards. So rejected from the upper Bollinger Band, bears in control, closing down near the low of the day, and if we break 469 on Monday, we know further pullback is coming, and we would be looking at 377, the low of Thursday. Weekly time frame, it is a bullish reversal candlestick. We have to see another green week next week to confirm it, but as of right now, the bears have all the momentum. As we can see, the last huge bounce attempt, we pulled back and set a lower low after that bounce attempt, which obviously shows that the bears are still in control of the overall trend. GLBS, same thing with the gap up open and the close. A little bit more of a lower wick by the end of the day with the close, but certainly not the day the bulls were looking for. We do have the middle Bollinger Band support, and we do have room to the upside here. We can see Dries rejected from the upper Bollinger Band. We have room before that upper Bollinger Band resistance, but this resistance of 675, we broke it by a couple pennies, but it's clear resistance as the bulls have been rejected from that level the past 2 times we've attempted. So bulls want to keep forming higher lows on the daily. A little bit more hope for some upside on GLBS because we do have this higher low and tightening range forming, whereas Dries had a lower low and continues the lower high, lower low pattern. Weekly time frame for GLBS is a bullish doji after the rejection from the 200-week moving average resistance. So if we see a green week next week, we could be back to testing that 767 200-week moving average. So GLBS, certainly some more hope for the bulls, in my opinion, than compared to Dries on the daily time frame. DCIX, brutal pullback day, bears in full control and closing down near the low. And if we break 315, we're looking at $3 psychological and then down to 250 psychological. Resistance 436, just another lower high. We can see the last initial bounce attempt topped out at 608. Lower highs, and this is just another lower high. Unless the bulls can turn around here, it is a bullish reversal candlestick on the weekly. Same thing. And we do have a double bottom here. $2 psychological support and 203. So that's where the bulls are rallying off of, and that makes it a little bit more bullish than Dries, again, because Dries formed a lower low. So DCIX with the higher low, Bulls need to confirm the weekly reversal candlestick, and we're rejecting from some weekly moving average resistances. ESEA, rejecting from the upper Bollinger Band. In the video on Thursday, we said because of the upper wick on Thursday, it was a lot less likely to see a gap up open, and we did not gap up open because we did not open above every price hit on Thursday. So it was a lower high even compared to Thursday, 297 compared to 292, clearly showing the bears had control here. And again, same thing, we had the bounce. Now this is just another lower high in that pattern. We have a lot of moving average support down here, right around that $2 psychological area. And the weekly time frame, it too is a bullish reversal candlestick that needs confirmation this next week. And it too is forming a higher low. So anybody on the weekly that is forming a higher low is a little bit ahead of the game in terms of a bounce attempt. And we can see ESEA compared to its previous low is holding up better than everybody else comparatively. And this 50-week moving average is key resistance that is now back as support. So watching to see if these names can confirm the bullish reversal candlestick on the weekly time frame. And Dries, even though it's the most popular and has the most volume, it is the weakest on the weekly time frame due to that lower low being hit. So we'll see how it all plays out. Keep in mind that these names are extremely hype-driven, and the way that these weekly charts have been trending on not all of them, because you can see GLBS is in an uptrend in 2016, a little bit of a downtrend in DCIX. So GLBS is the clearest bull over 2016 at this point. But you look at Dries, and that is just such a bear that you know the bounces are going to be short-lived. There's tons of bag holders, and this would suggest to me that there is some poor financial structuring and poor debt structure that likely is leading to dilution on top of all the bearish action. So we'll see how it plays out next week. Stop losses are a must. Protect those profits when you have them because they have been short-lived in these longer-term trends. I appreciate you watching. Have a great rest of your weekend.